All right.
I believe we are live. We are live. Okay. Good morning, good morning, good morning. I am so excited to be here. No, this is not made for kids. Okay, cool. Let me see. Boom, boom, boom. It is your girl, Kimberly Janelle. I'm so excited. So I had this epiphany last night that okay, cool. Oh, wait, y'all, hold on. Let me see. Okay. Okay. Oh, I know how I need to do this. Hold on, y'all. So I'm figuring out this whole go live, teaching live thing. Oh, wait, y'all, hold on. Okay. I want to be able to keep up with, I got a couple people that I know are going to jump into the, onto the YouTube stream. And so I want to make sure that I can keep up with the comments when they come. Okay. All right, I think I'm ready. I'm super excited, y'all. I'm excited to be in my wheelhouse. Let's go back. Okay. This is my wheelhouse. Like this is where I feel the most confident in who I am as a person. All my years of tax craziness, in the best way possible, right? I absolutely love it. And um, this is just the first part. So I'm gonna let y'all in on a little secret. I had this epiphany last night that I was watching this coach. Maybe I should go back. Hold on. Hey y'all, Kimberly Janelle, Intent to Profit. You can't even see my shirt. I got my little, that's all right. Intent to Profit, founder of Intent to Profit, where we teach entrepreneurs. Slow down, Kim. We teach entrepreneurs everything they need to know to become audit proof. And I got this epiphany last night. I was listening to this podcast of this girl who's talking about the niches in coaching, right? And she's talking about business coaching. And it's something that she said that woke something up for me. And you guys are the first to hear it. But it's in alignment with who I am. So she said a lot of times these business coaches, as a business coach, you try to teach your skills to your clients instead of teaching to your peers. The example she gave was if you are a destination wedding photographer, right? And you've mastered that, you've gotten really good at that. You then don't teach brides how to become a destination wedding photographer to take their own pictures. You teach other photographers, your peers, how to be destination wedding photographers. And it hit me last night. The one thing that I hate about this industry is that there are people who pop up every single year who are doing taxes. I'm doing taxes this season. I can get your taxes done. And 9 times out of 10, they are people who have figured out TurboTax. They know how to work some software and they start charging people to input numbers. And being a tax professional is so much deeper than that. There's so much more value that we could provide. And I've been criticizing the industry from that perspective. Like, there's nobody teaching people, if you want to get into tax, how to be a strategist. How can you sit down with an entrepreneur, look at what they're doing, point out where they're leaving money on the table, point out where their systems are broken, point out how can you help them strategize? That's what we need more of. And so I got this wonderful epiphany last night. And this is not just for tax professionals. This is for people who want to do bookkeeping, people who are enrolled agents, people who has anything to do with the money side of business. You can become a strategist. Now, there is no certification yet. There's no certification yet. You just have to have a level of skill to be able to see and diagnose and provide a solution. I'm going to be teaching tax professionals, tax people. I'm not even going to call you tax professional yet, because some of y'all don't even have no P10. That's another conversation. Anyway, so intent to profit is set up to teach the entrepreneur what they need to know to not leave money on the table so that they can run their business efficiently and effectively. And we teach tax professionals how to show up and identify errors and issues, embracing systems with entrepreneurs so they can help entrepreneurs. So entrepreneurs do need to know. They need to know what they need to know in order to hire the professional that can do what they know needs to be done. Does that make sense? Okay. So I'm super excited about that. Super excited about that. That's going to be rolling out here in the next couple weeks. I am stoked about that. So if you are here watching live, comment live in the chat. I see the live chat on YouTube. Welcome. I'm excited that y'all are here. If you are watching a replay, make sure you put replay in the chat. And before I get too far, if you are on YouTube and you have not subscribed to my channel, let's run them numbers up. Go ahead and make sure that you subscribe, okay? So I thought about with this QuickBooks class, I thought about putting some slides together and going through the slides. As I was doing that, I was putting this book together anyway, and I thought, okay, it just makes more sense for me to walk you through this training manual. I mean, that just makes the most sense to me. And once this class is over, you can purchase this manual. It's just $9. That's it. I ain't trying to get rich on y'all, but the manual is $9. So we're going to go through the training manual. So you'll actually see what you get if you decide to purchase the manual. And then at the end, towards the end of this training, we're actually going to go into QuickBooks. You see, I got my tab ready right here. We're going to go into, this is a sample company that QuickBooks has created that you can go in and you can try some stuff out and you can see the effect of the transactions that you manipulate, and then it goes back to how it was. You don't mess up anything, okay? So let's get this party started. Let me send this message really quickly. All right, I'm ready. All right, so my goal for this class, well, let me tell you why it matters. Number one, why it matters because business owners avoid bookkeeping. They avoid it. They avoid it because they don't like it. Most times they avoid it because it feels confusing. Stuff is overwhelming. They don't know what they don't know what they don't know, okay? But it doesn't have to be hard, and we're gonna make this really simple. It's gonna make a big difference, okay? So the purpose of this training is for you to learn the foundations of bookkeeping and how to use QuickBooks Online to track your money with confidence. At the end of this, you should understand basic financial statements. You should understand how to use QuickBooks to track income and expenses. You'll be able to see how your business is doing at any time. You'll be able to quickly read your numbers, and you can maintain accurate reports with less time. I can always tell when entrepreneurs do not have a record keeping system in place because you can ask them a simple question. How much money did you make? How much revenue did you generate in 2024? Probably about around like yeah, nope. Mm-mm. Mm-mm. It was probably about mm-mm. Nope. Nope. I was on a call. My husband and I was on a call on Thursday with an attorney, and she was asking about our comedy company. She said, "How much did you make?" I said, "One moment, please." And I just clicked over on the screen, and I was able to tell her down to the penny how much in income my business generated for 2024 or 2025. These years is messing me up. Okay. All right. So Again, I've already mentioned this. Most business owners are scared or unsure about bookkeeping. They don't understand the terms, the reports, what the numbers mean, so they avoid it. I hate sitting in classes that are taught by professionals. I sat in one a couple months ago, me and Donald. The CPA was teaching it, and because I am a industry professional, I understood what she was saying, but she spoke in these industry terms that the average entrepreneur is like, yeah, I don't know what that means. And she was just justifying the fact that it's complicated and hard to understand. And so, top 5 reasons why business owners ignore or procrastinate with their bookkeeping. They didn't start their business to be a bookkeeper. They don't want to be a bookkeeper. They don't want to be a bookkeeper. They don't want to do books. If you are an entrepreneur on here, this is probably your top reason why you have not done your books. You've procrastinated because you don't want to be a bookkeeper, and that's cool. And I'm not here to teach you how to be a bookkeeper. Okay. I'm here to teach you what your book should look like. I want you to have a basic understanding of what your QuickBook account should look like. I want you to have a basic understanding of where the transaction should go, what it's called. I want you to have a basic understanding of where the reports are in QuickBooks, so you don't have to wait for your bookkeeper, your CPA, your whoever to produce a report for you. You should be able to produce a report for yourself. I want you to know how to be able to tell when your books are done. I cannot tell you how many times I've encountered entrepreneurs who's like, yeah, I'm looking for a new bookkeeper. I had a lady, I was paying her like $400 a month. And, and I'm asking them, what did they give you? Well, they gave me reports, but I'm looking in their QuickBooks and there was nothing done. So they've been paying somebody $400 a month for a whole year, and they've been producing these phony, erroneous reports. I don't know how they was producing reports because they did no bookkeeping. Okay. So if you are an entrepreneur watching this, I'm not trying to turn you into a bookkeeper. I want you to have a basic understanding. So when somebody says you need a P&L, you know that means profit and loss. You know where to go find that for yourself. I want you to have a basic understanding when somebody says you need to categorize your expenses, that you know what the heck that means. Okay. I want you to have a basic understanding so that when your financial professional starts saying stuff, you don't get finessed. Okay. So I am not trying to turn you into a bookkeeper. I just want you to have a basic understanding of this. All right. Second reason is they hate dealing with taxes and paperwork. I get it. That ain't my thing because taxes is my jam, but I get it. Okay. But this will help to make the paperwork less overwhelming. When you have a system, it makes the paperwork less overwhelming. All right. Number 3, they're embarrassed or afraid to look at their numbers because they don't want to feel like they're failing. Well, if you understand what failing really means, then you never fail. Okay? It's not failing. You create a goal. If you don't meet the goal, you reassess and then you try again. Failing is when you stop completely. Not meeting a goal is not failure. Okay? Number 4, they don't want to speak in a foreign language. Accounting terms, it does feel like jargon. I don't talk like that, especially when I'm talking to entrepreneurs. I don't talk like that. Okay. And number 5, they don't think they need accurate, up-to-date reporting, but they do. You absolutely do. I cannot tell you how many people, how many times I've seen people miss out on opportunities because they could not produce a profit and loss statement. They couldn't produce a statement to show how much money they made the previous year. All of these different things. You have to have accurate, up-to-date reporting. Okay. So this workbook is going to help you to be able to track your numbers, understand your business better, because when you learn the basics, then you get your control back and your peace back. You feel like you actually operate in a business. Okay. So I love saying this. um, you don't get to say, I don't know. You don't get to say that no more. Well, how do you, I don't know that you don't get to say that no more. You don't get to say that no more. The moment that you decided to start a business, you don't get to say, I don't know. And I'm going to take it a step deeper. The moment that you clicked onto my page, you don't get to say, I don't know. Because anything that you don't know, I do. And I love explaining it and teaching it in a way so that you can understand. But you don't get the right to say, I don't know. Your new response is, I can find out. Let me get back to you. Let me get to that. Let me find that. Let me find out. You don't get to say I don't know. Okay? So, here's what you're going to learn today. Number 1, the basic financial statements, profit and loss, balance sheet, cash flow. They tell you everything that you need to know about your business. You are going to gain some confidence in using this software today. You'll be able to see how your business is doing. You'll understand how to see how your business is doing so that you can make smart decisions. Be able to learn how to read your numbers quickly so that you can review your performance regularly. And you will learn how to maintain accurate reports with the least amount of time possible. Okay. All right. So now we're going to get into the nitty gritty. Let's start at the foundation. Okay. There's 2 things that happen in a business. One is bookkeeping and one is accounting. Okay. One is bookkeeping and one is accounting. It is not the same thing. Okay. Notice in this sentence, it says bookkeeping and accounting. Bookkeeping and accounting is not the same things, but they are absolutely necessary for your business. Let me tell you the difference. And we do bookkeeping and accounting in our own personal finances. Let me prove my point. Bookkeeping is keeping track of what happens with your money. Okay? Think about when you get that paycheck. They deposit $800 in your bank account on Friday, and you swiping, 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 and swiping, 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 swiping. And most times we got a running total in our head, like, yeah, I think I done spent around $350. I should be at 450, 500. Okay, swipe, 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 swipe. When we look at our bank account Sunday night, and that bank account say $279.82, then that's when the accounting comes in, because accounting is analyzing. Like, oh, okay, let me go back and look at these numbers, because this math ain't mathing. Bookkeeping is just keeping track of everything. Accounting is analyzing. Okay? You have no idea what's not working. If I just bookkeeped my finances, personal finances, and I never went back to see check my bank statements, check my bank account, check my my app, then I would never know that I got double charged for something. I would never know that uh the cable bill, I put it on auto draft, and instead of 142 it was 379 because it didn't draft flat. That's accounting. Accounting is just analyzing what happened and making decisions. Oh, girl, we spent $279 eating out last week. Yeah, we ain't doing that this week. You making a decision because you analyzed, right? So bookkeeping is just keeping track. Just keeping track. And the way you keep track as a business owner, let me go back. As a person, I keep track of my transactions just from my bank statement, my bank app, logging on to my bank online. That's how my bookkeeping personally, I just keep track of it there, right? As a business, you have to elevate that. So a bank statement, a bank account is not enough. You also have to have software that puts those transactions in buckets, because I'm a business. Business has buckets. My personal life has buckets as well, but I don't have to categorize my personal finances. Am I making sense so far? Y'all could talk back to me in the chat. Let me know that this is making sense, okay? So there are 5 categories, and I want you to think about bookkeeping as buckets, these categories as buckets, okay? 5 categories, major categories in bookkeeping. The first one is accounting. And it's really just, or excuse me, income. Jesus, the first bucket is income, and that's just how money comes in. Income, money coming in. Now, another word for income is revenue. Most times you see revenue when it relates to business, because income is personal and revenue is for business. Okay, we gonna call it income. It's the money that comes in. All right. Expenses is the money that the business spends to run and operate. Assets is what the business owns. A lot of times, if you first starting out in business, you don't have no asset. You don't have no assets. You don't own nothing. Okay. A lot of businesses do have liabilities. We start owing people really quickly if we're not careful. And then the last bucket is equity, and that's what's left for the owner after all the bills are paid. Okay. Now, in each one of those buckets, there are, oh, this is how I like to explain it. I want you to think about bookkeeping as a book. Okay. I want you to think of it like a book. If you were reading a book, I should have had a book next to me. When you first open up a book, it tells you all the chapters that's in that book. Okay. Let's say it has 5 chapters: income, expenses, assets, liabilities, and equity. We got 5 chapters in our book. But when you go to chapter 1, there's sections in that chapter. It's not just one long run-on chapter of words. There's sections in each one of those chapters. So within income, there's different sections, meaning there's different types of income that I'm going to keep track of, right? So income for my business, my comedy business, we really only have a couple ways that we make money. And that is our ticket sales and our magazine sales. Now, if I wanted to go even further and define those categories, so I have income, ticket sales, magazine sales. If I wanted to go even further and get more detail, I could say VIP ticket sales, general admission ticket sales. And then I could say first edition magazine, second edition magazine. I could go as small in detail as I wanted to. Okay. I lied. We have more ways. Vendor fees. Y'all get what I'm saying, right? Okay. So I want you to think of bookkeeping as a book. Your business has a book. The book has 5 chapters: income, expenses, assets, liabilities, equity. And in each one of those chapters, there are sections, meaning there's different types or different ways that that chapter manifests. So different types of income, different kinds of expenses. You can have many types of assets. You can have a whole lot of different liabilities, right? It could be credit card debt. It could be loans. It could be, right? Okay. Equity, owner's equity, how much is left for the owner. You can have stock. You can have all different types of equity in the business. All right. So that is our foundation, and everything that we do in the business is based off of this foundation. So let's talk about the chart of accounts. These are some of the terms that CPA was using. It was driving me nuts. She's like, yes, in your chart of accounts, you have to make sure that you establish that in the beginning. I'm like, they don't know what chart of accounts is. Okay. They don't know what that word means. Chart of account is a filing system. Okay. It's a category. It's a bucket. It's a mini bucket within a bucket. These categories, and you'll have a category for each bucket. Those sections that I talked about, the different types of income, that shows up on your chart of accounts. So let me click over right now. This is a good opportunity to pull up the chart of accounts. Okay, thank you. So right over here shows the chart of accounts. And this is just going to tell me, it's going to tell anybody that's looking at my account what types of transactions happen in our business. Every category is not equal to every business. There are some things that I keep track of that somebody in a different business does not need to keep track of. Having a comedy business and having a consulting business, we keep track of different things because we have different ways that we can make money, and we have different things that we spend our money on, right? So this is just telling you, or whoever is looking at our books or our reports, the different things that we track in our business. The chart of accounts is the sections in each of our chapters. Okay? And I'm gonna get a little deeper into this. Advertising. These are the expenses. Let's look at it a little bit. Okay? This sample company is a lawn care company. Okay? So what they keep track of is going to be different than what a comedy company will keep track of. It's going to be different than what a bookkeeping company. Bookkeepers have bookkeeping, okay? I do taxes, tax strategy. I have bookkeeping, and what I keep track of is different than what I keep track of for my comedy company, okay? So just look at these are the account types here. So these are your buckets, the big buckets. Income. Remember I said equity. So we have income, and these are all the different ways they make money. They make money by doing landscaping. They make money from job materials. They make money, or excuse me, they have it listed as income, and I'm gonna explain that in a moment, okay? They make money from selling pest control services, other services, sales of product income. That means that they sell products and they make money, okay? Landscaping services is a way that they make money. And then they go into greater detail. Decks and patios, fountains and garden lighting, plants and soil. Being specific like this helps you to really see where your money is. So if you making 90% of your money in decks and patio and you ain't really making no money with plants and soil, you can make a decision like, okay, do we need to even, is this even something that we need to be bothered with? Because we making 90% of our revenue income with decks and patios. Maybe we just need to lean into that, right? Or vice versa. And let me get to the vice versa in a second. Okay, so these are all the different ways that money comes in. And it's categorized as income. Let's look at these expenses. They keep track of advertising, automobile expenses, fuel. You got to keep track of your bank charges, because if the bank charges you like $11 service fee, or you get an NSF fee, or any of those fees, that is an expense to your business. You don't have to eat that. Okay? Commissions and fees. If you pay dues and subscriptions, what subscriptions? Zoom, Calendly. If you have an Apple subscription because you play music in your establishment, I have subscriptions with oh crap, Slack, to communicate and some of those things. Those are an expense to my business because I use them in my business, okay? So these are your sections in your big bucket. Now, the other thing I want to point out to you since we're here, notice this little these boxes, BAL. This one says P&L. And then there should be another one as I go down. Well, maybe not. Okay. That's cool too. Okay, this tells you what report this item is going to show up on. Okay, so all of these with the green BAL, these are going to show up on the balance sheet. All these assets, current assets, fixed assets, the credit card, accounts payable, the liabilities, the equity, that's going to show up on your balance sheet. It is not going to show up on your profit and loss. But these others, P and L, they're going to show up on your profit and loss. Profit and loss is income minus expenses. Okay? Let's get back to this so I don't get too far ahead of myself. Okay. So, assets, liabilities, equity, income, expenses. Those are your 5 chapters in your book. Your sections in each chapter is where your chart of accounts comes in. It tells you what things you're paying attention to in each chapter. Okay? Now, let's talk a little more about these financial reports. 3 main reports that you'll use. profit and loss, balance sheet, and cash flow statement. So let's talk about each of them one at a time. I'm gonna sip my coffee. Y'all doing okay? Let me know in the chat. We doing okay? Mm, mm, mm. This is good coffee. Okay, good. Okay, good. Good, good, good. All right, let me keep going. Profit and loss statement. This is the income statement. When anybody wants to know anything about your business, how much money you made, where you spend your money, um, uh, what's your biggest expenses, they're going to ask for the profit and loss or the P&L, okay? This only shows money that came in and then money that went out. You want to be able to show not just I made probably around about like 85,000, but let me show you how I made that. I made 62,000 in ticket sales, and I made $850 in magazine sales, and I made um please know that I'm making these numbers up on the fly. This is not um and I made $2,742 in sponsorships, and I had $4,338 in donations. And that's important when you are talking about the financial health of your business. Reasons why you would need a P&L. If you are trying to get funding, they want a P&L. They want to see how you spend the money that you already have coming in. If you got big items, expenses on your profit and loss that don't make sense to them, if you're spending a whole lot of money on meals, if you're spending a whole lot of money on travel in a business where travel kind of don't make sense, that's going to be a red flag to funders. If you're spending a whole lot of money, or vice versa, if you got money coming in, but you ain't paying no money out, you don't have any expenses, that's, are you really operating a business, or what are we doing here? If you ain't tracking where none of the money goes out, that is a red flag. Okay. I heard people, and I still hear people talk about it all the time. Yeah, then people got all that PPP money. Baby, let me tell you something. Kimberly Janelle got some PPP money. Absolutely did. Absolutely did. Because I was tracking my income and my expenses. I had a report that I could provide, that qualified me for the amount of money that I got, that said from the government, that said, hey, let me give you a little something since you can't operate regularly in your business. And there were so many people who made money from doing things, but they missed out because they've never tracked anything. So they didn't have a Schedule C. They didn't have a report on their tax return that gave them gave them access to the PPP money. Now, I'm not talking about the people who was fraudulent. I ain't talking about them. But that is another reason why you would need a profit and loss statement to show that you have money coming in and you have expenses going out, okay? A balance sheet shows what you owe and what you own at the time of the report. So you can see people, you can hear people say all the time, I made $1 million. Okay, you made $1 million, but what was your profit? You had $1 million come in, but what did you pay out? You have to make people clarify, are you a millionaire because you had $1 million come in? Or you a millionaire because you got $1 million profit? Those are two totally different things. Okay. I have also seen that people have $1 million come in and they don't have as many expenses going out, but they have a whole lot of liabilities. They got this loan and this credit card and this. So if you had $1 million come in, and then even though in your profit and loss statement it shows you got a profit of, let's say, $500,000, but you got $1 million in loans, liabilities, you are not healthy. You are not a millionaire. Okay? Because that profit, whatever's in the bank, that rolls over to your balance sheet. That's an asset. Cash is an asset. So if you own 400,000 in the bank because you done paid your bills, right? You had $1 million come in, you done paid your bills, you got 400,000 in the bank, but you got 800,000 in loans and credit card debt and all this stuff. You're not a millionaire. You're actually in debt because your liabilities, what you owe, is greater than what you own, your bank balance. Okay? All right. And then statement of cash flows, that shows how the money comes in and out of your business over a period of time. So we had this money come in, it flowed through here, we did that, and then we ended the month with this. Okay? Most times people don't ask for a cash flow statement. The only purpose it really serves is for your information, for you to see and pay attention to trends when certain things happen within the month. That's what the statement of cash flow is for the business owner. Okay. Now let's dig into each one of these. The profit and loss tells the financial activity of the business. Again, it's called the P&L. Sometimes they call it the income statement. If you have a nonprofit, it's called the statement of activity. But it's the same thing. Okay. It answers 3 simple questions. Number 1, how much money came in? Number 2, how much money did the business spend to earn the money? And then number 3, how much money did the business spend operating during that time? Okay. So these are the sections that you'll see on the P&L. The first section, the first chapter is income. Again, money that came in. Now, something that most people don't have to worry about, but it's very important to share, is cost of goods sold. And this is the cost that you pay to buy the goods for the thing that you sold. Let me break that down. If I sell a service, if I do hair, if I'm a coach, if I do bookkeeping, if I do taxes, any service, you never have cost of goods sold. Okay? Cost of goods sold is for a product-based business because you sell goods, right? But there is a cost to each little thing that you need to put together for the final thing before you sell it. Examples. If you have a candle business, let's say you make candles, you got to buy wax, you got to buy wicks, you got to buy the fragrance, you got to buy the jars, you'll have to buy lighters. You'll go through lighters and buy butane and whatever goes in I think that's what goes in the lighters. Those are your costs of goods sold. What is the cost of those goods to make the product that you sell? Is it making sense? If I am a baker and I bake cakes or cake pops or cookies or whatever, my cost of goods sold will be the flour and the sugar and the milk and the eggs and the whatever else. I just told myself I'm not a baker. I don't know what all those. But those are your cost of goods sold, okay? I had a client that was they had a restaurant and they sell food. So their cost of goods sold is the raw chicken, the raw pork, the pasta shells for the macaroni, pasta noodles, the cheese, all of those things, the styrofoam plates, the trays that they put their food in, the silverware, everything that it takes for them to sell a plate for $20. All of those things are their cost of goods sold. Okay? And the way, again, that's a chapter in the book. Cost of goods sold is a chapter in the book. And however minute you decide to go with the detail, totally up to you. Sometimes it's easier to be very detailed. Sometimes it's not. For example, my restaurant people, if they buy all of their and they used to do this. There's a place called Restaurant Depot, and they would buy all of their paper goods from Restaurant Depot. So they could, under cost of goods sold, make a line item, a category on their chart of accounts for paper goods, so they can see every month how much they're spending in paper goods. And this was good for them because she kept wondering, like, why am I paying so much? Why are we running out? She said it seems like our costs are increasing, and she couldn't figure out why. Well, she looked at that one line, cost of goods sold, paper goods. She's like, oh yeah, I know exactly what's happening with my paper goods. She said people coming in here and sampling stuff, and every time somebody takes one of those little boats, that's taken away from where they give it, them being able to give it to a customer, right? So she started paying attention to that. But you can only do that if you track, okay? All right. Then the last chapter that shows up on the profit and loss is expenses. And this is the money that you spend to run the business. Here's some examples: supplies, office expenses, software, marketing. You buy a logo, advertising. You go meet somebody and have coffee. You got travel expenses. You got meals. All these different things. Okay. So with our lawn care business, the income that they make is through cutting lawns, from trimming, from edging. Some of their direct expenses is the gas that they put in the lawnmower. So every time they go to Speedway or Marathon or wherever, and they get gas for their in their buckets, gas, whatever that thing is called. That's a direct expense to the business. They gotta have that gas to run the business, right? The fertilizer, the blades for their lawnmower, the line and the string for the little edge trimmer. Those are direct expenses. And then operating expenses, marketing, software, office supplies, bookkeeping, administrative costs. Now, I have these separated direct expenses, cost of goods sold. For this lawn care company, I would not put that gas, fertilizer, blades, all of that. I would not list that under cost of goods sold because we're not selling goods. Okay. All right. Let me give you some more terms. I should have put the example of my baker, but I put the landscaping business because we was using the, okay. Anyway, let me tell you some terms. Gross revenue is a total amount of money your business makes before you deduct anything. Same way as your gross pay is whatever your salary is, or whatever that $20 an hour times 40 hours a week, $800. That's your gross pay. That's your gross revenue. Same thing. Total money that came in. I'm a millionaire. I made $1 million, right? That's your gross. The gross profit is money that came in minus cost of goods sold. So if I'm a baker, then I'm gonna subtract all the amount of money that I spent for the flour and the sugar and the whatever, right? If I make candles, then I'm gonna take the money that came in minus all the money that I spent on wax and wicks and jars. That's my gross profit. Net profit is the same as your net pay. After they take them taxes out, your insurance, all of that, net profit is the same. It is what you make after you subtract all of those expenses, okay? If you have a negative net profit, then you have a loss. If you have a positive net profit, then you got a little money left over, okay? Let me just add this little caveat right here. There is no such thing as I have to have a profit for X amount of years or I'm going to get in trouble. That is not true. Is there a safe zone? Yes. If you have a profit 3 out of 5 years, that's a safe zone and usually keeps the IRS from knocking on your door. But if you are tracking your numbers, if you are actually tracking your numbers and you end up with a loss after loss after loss after loss after loss, and the IRS does come knocking, they're not going to tell you that you can't claim these deductions, or that you got to take your business off or take your business away. Let me move this because this is so pivotal. You see my shirt? It's about the intent to profit. You just have to be able to show the IRS that you have an intention to make a profit, that you have a plan. I teach you how to do that in my community. All right, let's keep going. Balance sheet. This shows the financial position. Now, the P&L showed the financial activity. What's happening? The balance sheet shows the financial position. How healthy are you? Are you in debt or are you good? Okay, it shows what you own, what you owe, and what's left over for the owner. So there's 3 parts to the balance sheet. There's assets, liabilities, and equity. Okay, assets are what you own, cash in the bank, any equipment that you have that you own, computer, tools, anything of value that you own. Okay, liabilities is what you owe. Credit cards, loans, line of credit. That's what I was trying to say earlier, line of credit. If you have a line of credit, that's a liability. And then equity is the owner's share. That's what's left over after you pay all the bills. Okay? And equity shows up in owner's capital, owner's draw, retained earnings. All right? So there's a formula for the balance sheet. Your assets minus your liabilities equals the equity. In the same way that on the profit and loss sheet, your income minus the expenses is your profit. Okay? So if the business owns more than it owes, then it has value. And if your business owes more than it owns, then the business is in trouble. That makes sense, right? If I have $500 in my bank account, but I owe 6 people $500 a piece, I owe more than I own, and I'm in some trouble, right? But if I have $3,000 in the bank and I only owe one person $500, then I own more than I owe, and I'm good. Okay? So a t-shirt business, $8,000 in the bank plus the equipment that they own. They got a $3,000 credit card balance. So when you take the asset, what they own, minus what they owe, then they have $5,000 in equity. Okay? And the equity always belongs to the owner. All right? Now, there are reasons for you to leverage debt. All debt is not bad. There are reasons why you leverage debt. You keep your cash or other assets, and you use that to leverage somebody else's money. There are reasons why and situations when you would do that, but that's not this class, okay? I'm not one of those, all debt is bad. No, it's not. Okay. There's 2 different types of QuickBooks that people use, and I'm very specific and biased. There's QuickBooks Online, which is cloud-based, and then there's QuickBooks Desktop. Desktop is very old, it's antiquated. At some point, it is going to be phased out. You do not want to, if you are operating a business and you are going to hire out a bookkeeper, you do not want somebody that uses QuickBooks Desktop. You also do not want to use QuickBooks Desktop. Desktop means exactly what it says. You download it on your desktop. And in order for anybody to access it, they have to come to your desktop. Okay? You have to manually upload stuff. You got to create your own backups. QuickBooks Online is cloud-based. so you can get to it from anywhere. You can log on your laptop. I can log on somebody else's laptop. I can log on my phone. I can log on anywhere. It's completely um in real time. It updates in real time. Okay? You can connect your bank to QuickBooks Online. You cannot connect your bank to desktop. So at any time when you look onto QuickBooks Online, you know exactly how much money is in the bank because it updates in real time. That is the software that I recommend. They have another one. I'm getting away from myself. That's the one that I recommend. Okay. QuickBooks Online is faster to set up. It's easier to use. Super flexible. If you set up QuickBooks Online and you struggling, you don't know how to do something, it's easy to get on a Zoom with somebody, share your screen, let them look, or I can log in, or your tax professional, financial professional can look and see. But if you got desktop, um, yes, I was just going to say that. If you have desktop, then you making it difficult for any financial professional to help you. And when it's time for you to hire out, they'll basically have to start a new account because you cannot transfer desktop to a professional because it's on your desktop. Okay. Self-employed, QuickBooks Self-employed is within QuickBooks Online. Once you get to QuickBooks Online, there's different packages, and QuickBooks Self-employed is one of the packages that's in QuickBooks Online. Now, I used to refer people to QuickBooks Self-employed, but I don't do that anymore, and here's why. QuickBooks Self-employed does not grow with you as your business grows. So if I started out with QuickBooks Self-employed and then decided that like I needed to hire somebody, I wanted to expand my chart of accounts, do a whole bunch of different things, I could not simply do that in QuickBooks. I'd have to move to a whole nother package and it doesn't transfer. And it's really weird. Um, yeah, it is solely QuickBooks Self-employed is really for people who don't plan on growing the business. It's just kind of going to be the thing that they do, and they're always going to do it in this way. Maybe an example of that is if I'm a coach and I'm just going to be doing some coaching and that's just what it is, then I'm never going to hire anybody. I'm never going to have a storefront. I'm never going to own a building or any assets or anything like that. I'm strictly just going to be coaching. Then QuickBooks Self-employed would be cool for somebody like that. But if you have a business, if somebody has a business, let me just use myself, my financial firm. Right now it's just me, but there have been times where I've toyed around with, okay, maybe I could hire somebody, or maybe I could bring somebody in as an intern and teach them about tax and then let them do tax under me. QuickBooks Self-employed would not work well for me with the expansion of the business. So I hope that makes sense. Let me see. Is online secure? Do I need to purchase extra protection to protect my? Oh, that's a good question. QuickBooks Online is super secure, super secure. So much so that sometimes I've gotten locked out of my own account. Um, they have a lot of protections in the account. For example, when you set up the account, the initial account for the client, and they connect their bank account to QuickBooks, the client has to use their online banking user ID and password to log in to QuickBooks to make the connection. Then QuickBooks is also going to send them a text message based on the phone number that's on their bank account. They're going to send a text to that phone. So then the client has to put that number in. Like there's a whole lot of protections built in to QuickBooks. If at any time, sometimes in QuickBooks, the bank disconnects and you have to reconnect it, and it'll say, oh, okay, my bad. Let me send a code again. Every time if you have to reconnect it, it'll send a code to the owner whose name is on that bank account. and then they'll have to give you that code. So you'll have to say to your client, hey, I'm in your account doing some work. I need to reconnect your bank account, and they're going to send you a text message. Can you send that to me when you get it? So there's a lot of protections to protect those bank accounts, to protect that information. Yes, very secure. Very, 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 very secure. That's a great question. Okay. So now we're going to talk about actual QuickBooks inside the software. Okay. There's different tabs on the screen, on the left side of the screen. Each one of these help you do something different in the bookkeeping. So as we talk about each one of these, I'm going to show you where it is. All right. The first section is banking. And this is where you connect the bank accounts and the credit cards. QuickBooks pulls in the transactions so that you can categorize them. So right over here, let me refresh it. I'm going to get some coffee. Okay. They have updated, and this one looks different. My QuickBooks doesn't look like this. Maybe it's because it's from the accountant view. I didn't think about that part. Okay. Whether it says banking or bank transactions, doesn't matter. It's still the same thing. Okay. It's where you connect. Let me get this out the way. Okay. I got it. Okay. I got that too. All right. Banking is where you connect your financials. Okay. Any account that is associated with the business, you can connect it to your QuickBooks. Now, this MasterCard, let's talk about credit cards for a moment. If you have a personal credit card, it's in your name, you apply for it in your name, maybe before you even thought about having a business, whatever, doesn't matter. You can use that credit card for your business if you can verify that you only use it for business. So if I'm going and buying stuff from Kohl's and I'm, doing all this shopping, plus I'm going to Staples and buying stuff for my business, huge red flag. The IRS ain't gonna like that at all. But if the transactions on this credit card are simply to pay for my Zoom, to pay for GoDaddy, to pay for stuff from Staples, to pay for logos and flyers, and it's clearly, strictly business activity, whether it's in my name or in the name of the company, I can use that as my business credit card. Okay. You would link the account here. Yeah, you would link the account here. This is where you would figure out who your bank is. Let's say I go with BMO. It's going to bring it up. Okay. I'm not going to go this far because I don't know what it's going to do. Well, let's just see. Nah, that's what I figured it was going to do. Okay. Then on this page, it would tell you to put in your username and password for your online account. Now, this is where some people struggle because not every bank has online banking. A lot of banks do, but some people don't have an online banking username and password. So you can either upload, you can get your bank statements and you can upload them every month, which I would not recommend that. Or you can go to your bank and say, hey, I need to be able to access my account online. Can you set me up with a username and password? And then you can link the account here. Okay. This update, this is what I was talking about. You can tell when the accounts are not connected because there'll be like an exclamation point or something next to this number. And all you have to do is hit update. You see how these numbers are spinning because it's getting in touch with the bank right now to see, okay, what's our balances? Where we at? Okay. When you do that, when you update, that's usually when it says, and if this was a live account, then it will say that to you. We need to verify the identity of the business owner sending a text message to, and it'll show you the phone number, but it'll have all of the numbers. It'll be XXXXX. It'll tell you like the last 3 or 4 digits of the phone number that is sending the text message to. So that's when you would text your client and say, hey, I need to update your account, and it's going to send you a text message. Or if it's you, if this is your QuickBooks account, just know that the text message will go to your phone, and then you'll just enter it in. Okay. Okay. Then sales. This is where you create and track your invoices, your sales receipts, and your customer payments. So let's go back over there. Let's go to sales. So many things that you can do in sales. These same options here are across here. Okay. There's usually more than one way to do something in QuickBooks. All right. So on your home page for sales, it'll tell you exactly where you are, and it'll give you reminders. Hey, you got this invoice, you created this invoice that hasn't been paid. Okay. This is how much you have that has not been paid. This is how much that you did have paid. 9 invoices were paid, total 3,000. This is how much you need to have deposited. I'm going to show you about the deposits in a minute. And then your income will be shown here. Income by sales, income by invoices, income by whatever those are. And you could turn this little thing on and you could compare this year to last year. And it'll tell you you made $10,200 more than last year. That's always nice to see. Okay. All right. Let's talk about an invoice. Now, as a business owner, you need to be able to produce a paper trail. All right. Oh, you need a paper trail. You need a paper trail. You need a paper trail. Let me close this out. And you can easily create one. You add your customer. Let's say we're going to get some we're going to get some canaries from Amy. I don't know why we would, but we're going to go get some canaries from Amy. All right, let me leave that. Okay. Amy's address is going to be here. If anything is wrong, you can edit it right here. Today's date is the invoice date. If it's not net 30, if my stuff is due soon as I send it to you, make sure you change this. Net 10, net 15, net whatever. That just means how many days do they have to pay you? Do they have 10 days, 15 days, 30 days? Okay. Make sure that's there. Your invoice is a legal, it's like, let me say it that way. It's like a legal binding contract. If you have an invoice for services and you say on there that you gave them 60 days, 30 days, whatever, they can take that invoice and say, she gave me the due date on here, say December 2nd of 2026. If you ain't paying no attention. Yeah, it ain't due till December 2026. What's she tripping for? Okay. Here's where you will put your service, product, service, whatever it is. I don't know what we would buy from Amy. Let's just act like we're going to buy some rocks. Now, you will already have put your products and services into QuickBooks so that when you create an invoice, it'll pop up. You tell it whether you want it to have tax or not. You put the dollar amount, $500. Okay. Any notes that you want her to have. And then down here at the bottom, because we have, Amy's email address up here, then we can review the invoice and send it Or if you want to just send her a link because you're going to send her an email, you can send her a link. You can copy the link. This invoice is saved. And then you can go to your email and send her an email and say, hey, find your invoice here, and drop that link, okay? Or you can send it through the system and it will send her an email. Hey, girl, thank you for the stuff. Here go your invoice. Now, the beautiful thing about sending an invoice through here is that I hope it still does that. Oh, it's probably not gonna show. It's probably not gonna show me because it's the dummy account. Yeah, it's not gonna show me because this is a dummy account. But in your own account, you can open up the invoice. It'll tell you whether they received it, whether they opened it, they looked at it. So when people be like, I didn't get it, you be like, girl, there you go. Here it is. See where it says status open? That means that they opened up the email. So they be like, I didn't get your email. Yeah, baby, you did. Actually, you opened it on October 12th. I see that you opened it on October 12th. Maybe you just can't find it, Amy. Maybe you just lost it. But you definitely got it. You definitely opened it. Okay? Don't play with me. Play with somebody else. Okay. That's your sales. Let's talk about expenses. I'm trying to stay on track because I could talk about this stuff and get lost in time. Okay? Expenses. Again, this is where your chart of accounts is going to come into play. Your sections, what you're keeping track of, how you spend money. Okay? So they decided to keep track of credit card expense. Let me do this. You can list the credit cards that you have. So if you got a Lowe's credit card, if you got a Staples credit card, if you got um Walmart credit card, I don't know. You can set that up in your chart of accounts to keep track of just how much you're paying on the Staples card, just how much you're paying on the y'all got me, Lowe's card, the Menards card, the whatever. Okay? Expenses. These are all of the transactions that have happened. This says in the last 12 months. So we had a credit card expense for $34. We made a credit card payment of $900. Okay? This is how these transactions are going to come in from your bank account. Now, when we talk about categorizing, you got to categorize your expenses. That's basically saying, tell me which bucket this goes in. Not bucket. Which section in my bucket, in my chapter? Because we're in the expenses chapter. Chapter 3, expenses. In the expenses, what all are we keeping track of? Okay? So this credit card expense, squeaky clean car wash, well, we know that has something to do with my car. So that's the bucket that we're putting it in. Okay? No, go back. I didn't want to do that. My bad. Hicks Hardware. Burger joint. That's meals. This is when you go in and tell QuickBooks, no, that was for my car. Yes, that was when we ate. Pam's seats, or however you say that. You paid her a retainer or a consulting fee. Then that's legal and professional fees. Okay? Chin's gas and oil. So this could be different. If this is a lawn care company, and it is, this gas that they bought could either be gas that they put in their actual car, or it could be gas that they bought for their mowers, right? And if that's the case, then I wouldn't put it as automobile fuel because that sounds personal. I will create a whole separate category for just fuel. Supplies, under supplies, maybe, because that's a supply for this company. Is that making sense? I keep opening up stuff. Okay. I already said this. Your chart of account is the list that you're keeping track of in each one of those chapters. And then this is where those expenses go into the profit and loss, the balance sheet, and the cash flow. Okay. All right. When you initially set up your chart of accounts, now let me say this. Let's go back. Let's go over here to chart of accounts. When you set up your chart of accounts, it's already some categories in here. QuickBooks is already going to come with some categories in here because they kind of have an idea of what businesses keep track of. Okay. But you can always create a new category. Let's say there's something that I want to keep track of that's not in here. Well, for me, maybe if I wanted to keep track of VIP ticket sales, okay? And the account type, that's asking me um what type, excuse me, of transaction would it be? Well, that's going to be some income. Okay. And it's already showing me where it's going to show up on my profit and loss if I put it in there. And then the detail, none of these, now you cannot do anything about detail type. You cannot change, you cannot add the detail type. You just have to find the detail that makes the most sense. And for me, it will be other primary income. Okay. I don't sell products, so it's not that. This this is not a service. Now, if I was coaching or doing strategy sessions or something, then it would be a service fee or service income or fee income, right? So we're just going to select other primary income. And then I can put a description down there if I wanted to. Um, but that's how you add a new category that you want to keep track of if you wanted to add it. Now I can save this and it ain't going to hurt nothing, but you should be able to see it. Right here. Okay. Now, if there's something on here that you don't want to use for your chart of accounts, just don't use it. Remember the fuel that I said that I would create for gas for my lawnmowers? I would not put it under automobile because automobile means for my vehicle. I'm putting gas in my vehicle. But if I'm buying fuel for my lawnmowers, I would want to track that. Okay. The type of account that the account type is the bucket. Which bucket does this go in? This is an expense to the business. Okay. And then it's asking me the type, the detail. I would not put it under auto. Again, I would not put it under auto because this is the gas for the lawnmowers. So I will put it under supplies. His supplies is here. I would put it under the supplies and material. You could also put it under other business expenses. And down here, it shows you where it will show up on the profit and loss statement. Okay, it's up here. And I can make a description if I wanted to. I'm going to save it. And it should be down here. That's the first one under automobile. This is the one that I added as an expense under supplies and materials. Is this making sense for y'all? Let me know in the chat. Okay. If you got questions, you could definitely ask, okay? All right. You do the same thing in your chart of accounts. It doesn't matter which chapter in the book you are referring to, whether it's income or expenses or liability. Let's say you get let's say you get let's say the Chamber of Commerce gives you $20,000 for your business. Now you got this loan you got to keep up with, okay? You can add the loan. Loans are liabilities. Liabilities is what you owe, okay? Let me tell you the difference between current liability and long term. Current liability is just what it means. Like, what do you owe right now? Something that you got to have paid within a year. Long term is anything beyond a year. So if this is a 3-year loan, then you would say it's a long term. Okay? If you got to have it paid in 12 months, then it's current. Okay? And then the same thing over here. What type of loan? What type of liability? Is it a line of credit? Is it a loan payable? Is it insurance payable? What is it? And if you don't see anything over here that makes sense, you can choose other current liabilities. The same is true if you chose long term. If it's not a notes payable or a shareholder notes payable, you can choose other. Okay? And again, this is one that it told you was going to show up on the balance sheet. So this is exactly where it would show up. And when you saved it, all of these in the green are balance sheet. And as you roll through here, you should see bing, 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 Chamber of Commerce loan. So that when you make those payments to pay the Chamber of Commerce loan, when you go to the transactions, let's go to this expense transactions. When you go to these transactions, if you made a credit card payment and it was for the chamber loan, nope, this is income. That's income. Let's do this one. So this is my payment to the Chamber of Commerce loan, which also will then, I hope it still does it. Let me go to my reports just to see. Where's my, where's my reports? It should have been right here. Oh, it's right there. It's right here. Okay. Y'all see where I went? Over here is where your reports are. Let's see if it show up, if that Chamber of Commerce loan shows up on my balance sheet. So it asks you, do you want the standard reports, custom reports? Going through these reports and telling you how you can edit them and all of that, that's part 2. We ain't gonna worry about that. We're gonna select balance sheet. And the Chamber of Commerce loan should be, it better be. Hopefully it didn't reset that fast. There it is. Chamber of Commerce loan. So this wouldn't be negative. It would be however much the loan was minus the $34 payment. Okay. It's negative because the incoming money from the loan has not been categorized yet. Does that make sense? Okay, let me go back up here. All right. God, I feel like this should be like a 4-hour class. All right, sales tax. Sales tax is only relevant if you are selling products, okay? In some cases, if you're selling services, yes, you got to have sales tax. But if you are selling products, food, t-shirts, whatever, you need to be charging sales tax. You owe it to the state. It is not money that you keep. This is what I want you to see. Sales tax is a pass through. You collect it, then you send it to the state. It is not revenue for you. Okay. Sales tax is not my friend. I don't like it. I can tell you how to set it up, but I'm not an expert in sales tax, but just know that you have to charge it. Can any paid conferences or classes pertain to a business be deducted from a business account? Yes. Yes, good question. Can any paid conferences or classes pertaining to a business be deducted from a business account? And if so, what category or bucket would that go in? That's a great question. So first of all, it will be an expense to your business. Okay. Um, Let me pull the chart of accounts back up. That would be professional development. Okay. So we're gonna look and see. Now, I doubt that there's any professional development in this dummy account because it's a landscaping business, right? So they're probably not um keeping track of any classes or workshops or anything like that. But you can create it. Professional development. It's an expense to your business. So you're gonna find expenses. And then what type of expense? Other business expenses. I would choose other business expenses because there's nothing else that describes professional development. You just call it other business expenses. You can type in here conferences, workshops, seminars, etc. and save it. And then you should find it in your chart of accounts. And it's in alphabetical order, y'all. So that's why it take me a minute to scroll to it. So legal, maintenance. And when these are tabbed over, that means this is a subcategory of the category above it. So legal and professional fees, and we dummy down some more to keeping track of accounting, keeping track of bookkeeping, keeping track of my lawyer under legal and professional, under maintenance and repair, and we dumbing down some more. We're gonna keep track of building repairs, computer repairs, equipment repairs. Okay. So anything that you see tabbed over is a subcategory. Now, this one is really interesting. This is a category, subcategory, subcategory. So the big category is job expenses, but under job expenses, we're going to track the cost of labor, equipment, job materials. Under cost of labor, we're going to also track installation and maintenance. So we got a category, subcategory, sub. We got a category, subcategory, and these are subs. Okay. So you can go as minute as possible. Mentorship, if you are paying for mentorship in your industry, absolutely, it's professional development. It is professional development. Okay. Putting in the products that you sell. Let's go to that. Under sales and get paid, okay? Products and services. This is where you add what you do, what you sell. So if it's something that comes out of your inventory, then you can add that. If you have a service, I'm selling tax preparation. What category does it go under? I need to add a new category because ain't none of these. What category? Let's just put income. Let's just put income. You can write a description in here of what tax preparation is or whatever the product is, which income account. So remember I told you the big buckets is income, expenses, right? These are the big buckets over here. But then what type of income? Do I want to call that tax services? Do I want to separate tax services from tax strategy? That's where this part comes in. So I'm just gonna say this is it's just services. If we had to do sales tax, that would go there, and I'm gonna save it. This is how it knows. This is how it gives you, and it's here. Okay. Here's the categories: design, fountains. Remember, I chose income, so it breaks down the products based on the category that I put it in. This is how I have options when I create an invoice because I had to put the products and the services in here. Okay. That's how you do that. Okay. I think I already showed you how to link the bank account. You do the credit card the exact same way. Um, yep, I already showed you how to do that. Okay. So let's talk about how, let me see on my time. Okay, I got 30 minutes. I think I can get through most of this in 30 minutes. I showed you how to do some of this already. We already created an invoice. All right. We already created an invoice. Let's say somebody bought something from you. Let's say they gave you cash. They didn't pay with their card. They gave you cash. You can create an invoice. I mean, not an invoice, a receipt. An invoice is for them to pay. A receipt is when they have paid. And you don't need to do both. When you have a receipt or invoice for them to pay, they get a receipt once they pay. Okay? A receipt is if they've paid you. Let's say they gave you cash. Like, hey, I want you to do my taxes, or hey, I want you to counsel me for an hour. I don't have no, there are some people who don't do debit cards, credit cards, all of that. I got cash. Okay. You need a paper trail for everything. Not only do you need to go deposit that cash in your bank account, and there needs to be a deposit on your bank statement, let's say $400. There needs to be a $400 deposit for that money. You also need to produce a receipt. Okay. So over here, I seen receipt. Yeah, receipt is here. And remember, there's more than one way to do just about everything. Oh, that's uploading my receipts. That's uploading my receipts. There's more than one way to do just about everything in QuickBooks. Okay. So on the sales page, here it is. I know it's on the sales page because I made a sale. That's why you produce a receipt. Okay. On the sales page, create a sales receipt. Now, this isn't necessarily for the customer, but you can create it and send it to the customer the same way that we sent an invoice. Choose the customer. If you've never done business with them before, you click this to add a new one. And I'm going to put all the information here. You don't have to put their address. You definitely need to put their email, which is up here. The only things you really need is their name, their business name, their email, okay, to set them up. I'm going to pick Cool Cars. His email address comes up here. Maybe I don't want to send it to him now. Maybe it's just for my records. If so, I'm going to click here so that it does not send it out. I'm going to choose tax prep. And he paid me $500 for it. No taxes. Okay. So amount received. So because I marked that I was going to send it later, I can just save it and close, or I can save it and send it to him. And this is what the email is going to say. Hey, thanks for your business. Here's your receipt. Everything needs to be a paper trail. If you want to change what it says, you can add in here. Come pick up your paperwork tomorrow. And you can send it. Okay? Does that make sense as far as the receipt is concerned? Now, I'm going to be honest. Recording a bank deposit. I don't use this. I do not use undeposited funds, excuse me, because it's too complicated to change it once you make the deposit. And if you don't remember to change it, then you got double money. So I got the income in there as undeposited funds. But then when it shows the deposit in my bank account and QuickBooks updates, if I don't go back and change that undeposited funds, then that money shows up twice. So I just don't even use it. Okay. Let's talk about receiving payments. There's not very many transactions that happens in my QuickBooks that doesn't come through an invoice. There's usually never a reason for me to record a payment or deposit because it shows up when I go deposit it into my bank account. Does that make sense? The that part of QuickBooks, I think it's good if you have a bigger business, if you got a lot of activity, if you got somebody that takes payments on a regular basis for your business, and you got bank days. So you got money that comes in, you need a record of keeping track of that money coming in. So you got a receipt book that they writing in, but then they're also logging the payments in QuickBooks. And then when you go to the bank and make the deposit, then the deposit is reconciled within QuickBooks. But I don't record I don't record payments and deposits in QuickBooks. Okay. I just go make the deposit at the bank and QuickBooks sends that deposit. Recording expenses. There are 3 ways. One way is you can manually enter in an expense. And sometimes you have to do that if the transactions as they come over from your bank, when you do the reconciling at the end of the month, and I'm going to show you that when you look at your bank statement and you look at the transactions in QuickBooks, if there's something that's on the bank statement that did not come over into QuickBooks, you have to add that in manually, or it's not going to your account is not going to reconcile. Okay. So the first way is you have to do it manually. And sometimes you do if everything doesn't come over. The second way is bank feed. This is the majority of the way that the expenses come in. And then the third way is receipt capture. When you go to the gas station, you take a picture of the receipt, you upload it through QuickBooks, and it records the expense that way. I'm going to show you that as well. Okay. Writing checks. Listen, there are some people that still write checks. And you want to record them in QuickBooks that you wrote the check. And then when you get ready to reconcile, you'll note that the check has come through and cleared. I'm not trying to make entrepreneurs bookkeepers, okay? I'm just telling you that there's ways that you can do this. And if you are watching this and you're interested in learning how to be a bookkeeper, learning how to master QuickBooks in that way, then maybe that's a different class that I need to do for the industry professionals. Let's talk about this part though. I need to make sure we talk about this part. Your books are not done if they have not been reconciled. What does reconciliation mean? Let me give you an example. People always talk about, oh, it's tax season, it's tax season. No, it's actually tax reconciliation season. What does that mean? All year long, you've had taxes taken out of your paycheck. And IRS has determined, based on your filing status, how many people you claim, all these other things, they've determined that you owe them X amount of dollars. You've been paying into the tax system all year. What you're doing when you sit at the tax desk is you're reconciling. You're taking what you have paid into the tax system. And as an entrepreneur, there's things that the IRS don't know. So yeah, dude, I made $25,000 in my business, but I also had $16,000 in expenses. The IRS has no idea of that, right? So when I look at my income minus my expenses, minus my deductions, minus my credits, minus my da-da-da-da-da, I show that I owe you $3,000 and I've paid $4,000 into the tax system. The IRS says, oh, okay, well, we didn't know about that $3,000. So we owe you $1,000. Or vice versa. If the IRS shows that you owe $2,000 and based on what you made and your expenses, you showed that you actually owe $3,000 and the IRS is like, oh, okay, well, give me my money. It's reconciling. We're looking to see, do I owe you? You owe me? We cool? We good? Everything match? Okay, cool. You got to do that at the end of the month. Reconciliation. It means that whatever happened in your bank account is showing up in QuickBooks because sometimes it does not happen. So here's how you do it. And you got to do it every month or you cannot, or let me not say you cannot. You got to do it every month. And it makes it easy. You get your bank statement and you open up QuickBooks. And I'm going to show you, it's even easier in QuickBooks Online because if they're connected, then everything transfers over. Okay? But this is the process. You get the bank statement. You look at the beginning balance for the month. You look at every deposit and payment. You make sure it's showing up in QuickBooks. Then you look at the expenses and you make sure that's showing up in QuickBooks. And the ending balance on your bank statement should be the same ending balance that shows up in QuickBooks. Let me show you. Okay? So we're going to go back to banking because that's where it would be. Right here it says reconcile. One thing I love about QuickBooks is it's going to have a little mini video in just about every section to explain stuff to you. Okay. So it's going to ask you, you're looking at the bank statement. It's going to ask you, what's the ending balance on this bank statement? And then it's going to ask you, what's the date on this bank statement? And I'm going to put. Now, if you have not went and categorized, it's going to tell you, you got to do that first. So let's go over here so I can show you where that happens. Okay. On the banking screen, this number here tells you how many transactions have not been categorized. You have not told me what bucket these go in. QuickBooks is so smart that it'll say, hey, I found a deposit in the same amount as this transaction. Do you want me just to go ahead and match it? So I'm going to say, yeah, girl, go ahead and match that. It's going to do that with the checks, bill payments, deposits. It's going to say, hey, I found the match. You want me just to match them? And I want you to see as I match them, my number is going down. So now I'm at 18, 17. Okay. If you log into your QuickBooks and there's numbers here, it has not been, your account has not been categorized. Let's match all these. You can also see the number right here. Okay. Let's match, match, match. Okay, there's still some here, but this is what it looks like when it's completely caught up. When you click on this account and see it, the transactions change when I go from account to account. This is that deposit. It found the match. So let me go ahead and match that up. You need to go under categorized. Okay, this is a dummy account, so it's not going to be there. But once this has a check mark and there's no more transactions to be reviewed, everything that you've put in buckets should be under categorized. Okay? Now I can go back to reconcile. Okay, we're gonna ignore that. Okay. No, let me go back. Most, let me go back. Let me go back. Let me go back. No, let me go back because I need to show you this part. Reconcile. Okay, on this screen, when I put the date and the ending balance, next to that, if your bank does this, it will download automatically the bank statements into your QuickBooks. So you don't have to go get it from your online account. You don't have to find it. It automatically downloads them and it'll be right here. Okay? There'll be a drop-down box right here. Because I had 3 accounts, I had a checking account, a savings account, and a credit card. I need to tell QuickBooks which account we're reconciling. Are we reconciling the savings, the checking, or are we reconciling the credit card? Okay, we're going to do the checking. Now, let's just pretend that my bank statements have already uploaded into QuickBooks. If it does that, then it will automatically select all of the transactions that are on the bank statement. It will already pre-select. Okay. Now, the goal is for you to have a 0 right here. When all the deposits and all the expenses on your bank statement match all of the deposits and all of the transactions in QuickBooks. Let's just do that. Yes, select them all. Okay. There is a difference. So then you got to go in here and figure out what's showing up on my bank statement that's not showing up in QuickBooks. And let's just say there's some stuff in here that's duplicates. I'm going the wrong way. Let's do this. Boom. Let's see if I could get to 0 by just guessing which ones to unselect. Getting closer. Okay. That's probably as close as I'm gonna get. So I've gone line by line by my bank statement And all the ones that have the green check mark are what's on the bank statement. Let's say there's a transaction that's on my bank statement that's not showing up in QuickBooks. I gotta add it to QuickBooks, right? Remember I showed you how to manually add expenses. And we would do that under my expense transactions. We need to add a new transaction. You see that up here? And you can tell it what it was. Is it an expense? Is it a credit card payment? Tell me what it is. Who did you pay? If it's not a vendor that I normally use, I don't have to pay. I don't have to put that in there. Tell me what it was. It was advertising. I paid JF $100. Then it's going to add that into my list of transactions, and then I can go back and reconcile. Okay. Yes. I'm going to save it. Go back to reconcile. Every time you leave out a reconcile to fix something, it's going to ask you, do you want to finish? Yeah, let's go back in there and finish. Okay. I still got that $1.17 difference. I should have put that transaction as $1.17 so y'all can see what that looked like. But at any rate, J, the flyer for J should be in here. I don't remember. Oh, I know why it's not showing up. Because the date that I chose. Today's date is when I put it in there. And this statement date is ending November 5th. So that's why it's not showing up on here. Okay. But the point is to get this to 0. Once it gets to 0, it's going to give you a green check mark. It's going to say, cool, do you want to save it? And you want to say, yes, you want to save it. If you have not reconciled, you can also go to the history. When you log into your QuickBooks and you go to reconcile, you go over here to history. It's going to show you all the times that your account has been reconciled, and there should be something for every single month. If there isn't something for every single month, then the person that you're paying to do your books is not reconciling, and your account is not in good standing if it has not been reconciled. Okay? I think I already showed you. I did. I showed you these reports. I'm not going to go through and show you how to customize them. You actually absolutely can. Well, let me just show you this about the reports. If you need a profit and loss statement, profit and loss statement is what you give your tax professional. This is what you can print out. This is this year to date, so it's January 1 through November 22. If I need one from last year, then I'm going to go up here and change the date. And I'm going to change this to cash. Accrual, most businesses are cash businesses. That means that when I get the money or when I pay out the money, that's when I record it. Accrual means that I don't pay you until the service is provided for what I don't recognize it until the service that is provided has happened. So think about it like concert tickets. You pay for concert tickets in advance. You don't go to the concert for a couple months out, right? If I was doing accrual-based business, I wouldn't recognize the expense for the tickets until the concert happened. Okay. But you can customize these reports based on when you need what dates you need to see the information. Maybe it's custom. Maybe I need to see it from January and February only of this year. Okay. I don't want you to worry too much about these. Oh, let me show you statement of cash flows because I didn't show you that one, that report. I am going to give you the link to this this QuickBooks. It's called test drive where you can go in and play around with this and you can't mess anything up. Okay? Okay, here's the reports, statement of cash flows. And it literally shows you where the money flows from. So cash from operating expense activities and where that is. And then cash from investing activities, cash from financing activities. Okay. What's the increase or the decrease in your cash? And then what is your cash at the end of the year? Okay. All right. So here's your checklist. I did pretty good with my time. I did so good with my time. Okay. These are the things that you need to do every week. Match your bank and your credit card transactions in QuickBooks. You need to go through accounting is where it's at. These bank transactions, you need to go through these every week. Don't wait. Y'all see how this went back to 25? You can't mess nothing up in here. You can't break nothing in here. You need to go through these transactions every week. Pick a day. Sunday night, uh, Thursday night, when you're watching your shows, just pick one day, okay, every week and go through your transactions and put them in a category. Make sure that the ones that are in a category are in the right category. Check all of your receipts and attach them. Make sure that your sales and deposits are showing up correctly. Make sure all your customer payments are recorded. Any bills, because you can do bill payment in QuickBooks. Make sure you've marked those as paid so it adds to your income. Okay. And then once a month, you got to reconcile. And you got to do that reconciliation process with each account. So you got to do it with the checking account and the checking account bank statement. You got to do it with the savings account and that statement. You got to do it with the credit card and that statement. Okay. Make sure that the amounts match. Again, any bills that haven't been paid, if you created that invoice in the system, you got to review that. Send them a notice, send them an email. Check your profit and loss. Make sure you spent last check what you spent and make sure that you know that that's what you spent. And then this is when the accounting comes in. If you spend if you're looking at your expenses, this is the time where you say, okay, yeah, we spend way too much in this. We're not doing that next month. So then what's your plan to make sure that you don't do the same thing next month? Okay. Review if you need to change prices or cut expenses. Review problem areas and fix anything before tax time. Do that every month. Okay. Your goal is to have clean books so you never have to say, I don't know. If you have clean books, then it makes tax time easier. It makes money decisions easier. It makes it less stressful. This, again, the report that you give to your tax professional is the profit and loss. And if let me put this as cash. This tells my tax professional all the buckets that I kept track of all year long. And your tax professional should know exactly what to do with each one of these numbers, where they all go. Okay? Um, Woo, I can't believe I did that in 2 hours. Let me see. QuickBooks several months ago, already generating income. Will it go back and pick up previous transactions? Yes. If it does not, let me reshare my screen. Let me not say if it does not. It will. If you go to bank transactions, it should have every transaction. If you go through here and you like, oh, it's missing September. Like I don't even see September in here or nothing. Chances are you need to go up here and update. Just click update. And it'll reconnect to QuickBooks and make sure that it got everything that QuickBooks had. Okay? If by chance there's something on the bank statements that does not show up in QuickBooks, then you'll have to manually add it. Um, Yep, manually add any previous transactions from my statements. Yeah, QuickBooks is pretty good though. It if especially if your bank um downloads the transactions automatic, or not the transactions, the statements, bank statements automatically into your QuickBooks, then it easily brings all of those transactions out of the bank statement into QuickBooks. There's usually not very many transactions that you'll have to manually add, because if it went through your bank account and your bank statements automatically download, and you set that up when you first link the account, it asks you, do you want to automatically download your statements? And then it'll start doing that for you moving forward. If it does not, that's an easy fix. You can fix that in your setup. Okay. Let me share this with you. Um, this is the link. This is the link to the test drive. If you are watching on YouTube, it's in the description. The test drive account where you can click in, play around with stuff, add some accounts, manually add some transactions, see where it shows up. You won't mess anything up. That account resets itself um, often, and so you can't mess anything up. Also, this workbook that I was teaching out of, I am making it available for $9. I ain't trying to get rich on y'all. If you want to buy the workbook, it's $9. You can just click on it. Once you pay for it, on the thank you page, the link is there for you to download it. If you are watching on YouTube, the link for the workbook is in the description. I'm going to do a part two because I think there's some more deeper advanced stuff. Now that we got the foundations out of the way, now that you understand the five buckets: income, expenses, assets, liabilities, equity. Now that we understand what the chart of accounts is, it's just the filing system in each one of those chapters. And I showed you the basics. I promise this is just the basics. I could talk 2 more hours about all the different things in QuickBooks. Um, but now that we got the basics, the foundation set, now we could talk more about some advanced stuff. Like, what if you want to keep inventory in QuickBooks? What if you want to keep track of two different businesses in one QuickBooks account? What would that look like? So much more stuff that we could talk about. I think I'm gonna do a part two QuickBooks class. I was gonna do it next week, but I'm not ready. I'm not ready. Instead of doing a part two, I'm going to do a lunch and learn series next week um, that I think will be extremely beneficial to entrepreneurs for you to, let me see if I can find the flyer real quick because I just made it last night. I just made it last night. Um, yep, let me share my screen. This is going to be free, and it literally is going to be during lunchtime. Um, okay. 12 o'clock each day, because it's going to be each one strategy a piece. It's easily going to be 30-45 minutes maximum. Okay. Monday, we're going to talk about business trips versus vacation. How can you turn your vacation? Me and my husband don't take vacations. We don't take vacations. Every trip is a business trip, but that's because I know the tax law and I know how to make it a business trip. You need to learn how to make your vacations, your family time, birthdays, all that stuff, business trips. We're going to talk about that on Monday. On Tuesday, we're going to talk about business use of vehicle to make sure that you are not leaving money on the table because you don't know what to keep track of. And on Wednesday, we're going to talk about home office deduction. You can write off your rent, mortgage, whatever, but you got to play by the rules, okay? Nothing that you got to register for. You don't got to try and find it. I'm going live on YouTube each day to teach it. So, this flyer is on social media. Yep, it's on social media. I can also, I think I can add it to this chat. Um, I think I can. I think I can. I think I can. I'm gonna drop it here. If I titled it right. I hope I did. That'll make it easy to find. It's called Lunch and Learn series. The last thing I want to tell you, and then I'm gonna let you go for real. HIJKL. The last thing I want to tell you is there is, oh, did I? I'll get it to y'all. All of y'all follow me on social media. So it's on my Facebook, it's on my Instagram. Because I can't add it here. 12 o'clock every day. I plan to be done by like 12:45 at the latest, but it really should only take me about 30 minutes and then maybe some Q&A to teach each of those. Last thing I want to tell you is that you have an opportunity to work with me. Let me tell you the ways that you can work with me. Number one, if you are an entrepreneur and you know it's time to start thinking about taxes, you do not need to wait until January to start thinking about what you need to get, how you need to, all of that. Strategy session, 90 minutes, recorded session, $297. It's only going to be $297 for a little bit because as I start getting back in here real good and I start teaching other tax professionals how to do the same thing, then my price gonna go up. It's gonna go up. It's gonna go up. So $297 for 90 minutes. It's a recorded session. Me and you on Zoom. Me and you going through all of your categories. Now I done talk to you about what the buckets are and how the sections in each bucket. We gonna talk about the sections in your business and what you leaving on the table, what you need to pick up, how you need to keep track of it. Strategy session, 90 minutes. $297. It's recorded, so you get it, and you get to review it whenever you forget. Okay. The other way that you can work with me is in the Intent to Profit community. That is a place where I'm doing stuff like this. Now, I'm giving y'all all I got for November just to show you who I am. But December, I'm closing it. It's gonna be a price to get this value. I'm just showing you how I get down. So November, I'm just pouring it out. I'm giving you what I got. But in December, I'm going to be adding that to my community. We're going to be getting down in the community. $69 a month to be a part of the community. But guess what? That's a write-off because it's an investment to your business. That's the second way that you can work with me. Last way you can work with me is I have 25 spots for entrepreneurs who want to go through a 5-week course to teach you how to make your business audit proof, how to show the IRS that I have an intention to make a profit. 5 weeks, we talk about the 9 factors that the IRS uses to make their determination. I help you get all of your stuff, your ducks in a row. That's $597. Only 25 spots. But the doors close to that January 31st, and we get started February 2nd, and we go for 5 weeks. By the time you get done working with me, you're going to have all your ducks in a row for tax time. You're going to be ready to go, and you're going to feel confident that you can move forward in business because of the things that I show you in that 5-week course. So that's in the description of the YouTube channel as well. I hope this was valuable. I wish we had another hour. I'm telling you, I love this stuff. I could talk about it for another hour. But let me know in the comments if this was good for you. Yeah, shout me out on Facebook if this was good. Holla at your girl, Kimberly Janelle, Intent to Profit. Until